please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
That it is indeed, as Prashant was telling us earlier, that hasn't really changed too much. What a day for the bulls it's turned out to be. We aren't quite at the highest level of the day, but still there's plenty of green on the screen, and it's the banks that have led this rally from the front today. Hello and welcome to Closing Bell. I'm Surabhi Upadhyay and with me is Prashant Nair. Prashant, any complaints from the day today, or is it sort of all good so far?
More. Why not more? But, you know, I think that would be nitpicking. I mean, it's been absolutely spectacular. And the graphic on your screen is going to just come up. It'll basically put things in perspective, how the market has done, I mean, over the last couple of months. You know, it's just, to my mind, incredible that we've had 2 months in a very short, in basically the second half of this particular year, where the market has gone up 5% and more. I mean, actually almost 6% months. July, we were up 6%. August and September, the market middled around, didn't do very much, was down almost 3%. October, that is last month, we were up 5.6%. And of course, the question is, how do we sort of, you know, wrap up November? But as they say, a job well begun is half done, right? So I think it's a good beginning.
The beginning, and what a beginning. And we're talking about almost a 30% equity rally in the last 1 year. That's some beginning, all right. Okay. Well, we will keep analyzing all the news and the cues for you. Let's start with the headlines. The Nifty firmly above the 10,400 mark, while the Sensex adds over 350 points. The rally fueled by banks, which are on fire today as the Nifty bank hits fresh record highs.
TVS Motor reports an inline set of earnings. Margins at 8.6% beat expectations, while revenue grows 18% to 4,050 crore rupees.
Are a marginal miss on analyst estimates. Eicher Motors also disappoints as sales growth for the month of October comes in at 18% versus expectations of 24%. Escorts, however, comes out with beating expectations, while M&M numbers are in line with the street view.
On the earnings calendar, Tech Mahindra profit is likely to fall 8% despite operating income growth. The revenue growth may be led by enterprise vertical. Hero MotoCorp sales growth will be driven by an 11% jump in volumes.
And Dredging Corporation jumps 20% after CNBC TV18 learns that the government is likely to sell its entire stake in the company. Sugar Company is also in the green as the cabinet is likely to have given an approval for a revision in ethanol prices. That's an exclusive.
Okay, so those are the top stories which we will sort of touch upon in a bit from now. But how should you position yourself in this last 1 hour of trade? Ashwini Gujral and Mitesh Thakkar are joining us right in the top of the Closing Bell show. Gentlemen, thank you very much, both of you. Ashwini, what would you put out as trades and, I mean, how would you characterize how we've begun this month?
Well, you know, one thing people should keep in mind that this rally started, or this swing started at 9,700. So the current breakout, you know, has happened after a fairly strong rally. So you may or you may not get the kind of follow through that you would have gotten after, you know, somewhat of a correction. So the follow through may be milder, and you know, we are getting different spaces which tend to run up on a daily basis. Like today is the turn of the divestment stocks. So that could be a better idea from here rather than taking you know, blanket calls, because out there, unless there is some news supporting, it'll be difficult for follow through to come in. As far as individual stocks are concerned, UPL is a sell with a stop of 795, target of 765. Shipping Corporation is a buy with a stop of 98, target of 110. And STC is a buy with a stop of 199, target of 214.
Okay, so plenty of PSUs making it to Ashwini's list. By the way, there was some interesting news on M&M Finance that was flashing on your screens. Let's just pull up the stock and take a look at how it's reacted. There's more money coming in from the parent. 1160 crores, 1,160 crores. That's how much money Mahindra & Mahindra will be infusing. And this is going to be by way of preferential warrants that would be sort of subscribed to. There's a QIP that is going to take place. So that's one stock that's holding out positive. Mitesh, good afternoon. How have you read the day today, and what are the top trades for the last hour?
Good afternoon. I think, as I said, it should be a positive thing given the fact that the bank Nifty in the morning gave a breakout about 25,150. And I think it's a very fairly, I think, satisfying day in that sense that the breakout has seen follow through, and we made good highs, fresh highs, and I think the strength is still there, despite the fact that some 20-30 points here and there chopping will take place. Overall, I believe that this should see the market inch up further in the next few days to come by. So we continue to trade with long bias. The current recommendation that I have are a buy on MGL with a stop at 12.29 for targets of 12.95, and Shipping Corporation, a cash stock, has given a good breakout today. Price and volume action there, so buy with a stop at 96 for targets of 110.
Okay, so those are Mitesh's stocks. Ashwini, just a quick question on, what have you made of the bank move today? Of course, ICICI and some of the corporate private sector lenders have had a much better day. The PSU rally, I mean, it's not sort of really built on in a big manner from the morning. So what's the better trade now?
See, basically, if you see the Bank Nifty rally, it is about ICICI Bank and State Bank. The other PSU stocks or mid-cap PSU stocks, even PNB for that matter, are lower than they were morning at the open. So that way the rally has narrowed. Kotak Mahindra is actually in the red. So basically it's Axis Bank, ICICI Bank and State Bank, and that is where the problem is that not all PSU banks are rallying in this second leg, and chances are a lot of the market also gets narrower, because today the market breadth is 660 decliners to 952 advancers, which isn't great for a first day. So my sense is that maybe the larger banks could do better than the mid-cap PSU stocks. Okay,
fair enough. But well, the stock that's doing the best today on the index is, of course, Bharti Airtel, which is why it is also our Stock 360. So this is a segment where we cover a stock from all angles, technical, fundamentals, all possible news, earnings, any kind of triggers that you have in mind. And it's really earnings that's powered this leg of the Bharti run. Ronit has the breakdown. Ronit, I was looking at the India ARPU number, and for once you would have thought maybe people will sort of nitpick and find a problem with that. But no, I think as you said it in your link header, it's time for Africa?
Yeah, absolutely, it's time for Africa. So the stock right now is at a 10-year high, largely because they reported their numbers yesterday. And Surbhi said Africa is what stole the show. The African margins were up 400 basis points at 32.8, and we were expecting only 28. So that's a big beat. Moving on, the African business also reported their highest EBITDA ever at around 1,600 crores. Remember, the African business contributes around 20 to 25% of Bharti's top line. Now moving on to the average revenue per user, that was a slight disappointment. That came in at around 145 versus 154 Q on Q. So this is one of the lowest average revenue per users in a long time for Bharti Airtel. So this is one cause of worry. Second, moving on, the telecom sector, what are the triggers? Why are these stocks rallying? The first is Bharti Airtel, I'll start with. They bought Tata Tele's mobile operations business on a debt-free, cash-free basis. So what this does is this improves their market share from 35 to almost 41%, which makes them number one, even higher than the Idea-Vodafone merger combined. Moving on, they're also evaluating a majority stake sale in Bharti Infratel. So they own around 58% in Bharti Infratel, which is valued around 45 to 46,000 crores. And their debt currently is around 91,000. So if any stake sale happens, this is positive because it helps them cut their debt by around 45 to 50%. Moving on to the telecom sector, what is happening? The telecom is going through a wave of consolidation right now. Exits of smaller players such as Reliance Communications, as well as the other players such as Tata Tele. Moving on, the next 2 years, the top 3 players will account for 90% of the sector revenue. And finally, CLSA have come out with a report on Bharti Airtel, and they've given a target price of 637, saying that Bharti Airtel is a play on the data boom in India, as well as they expect a 16% EBITDA CAGR going forward for Bharti Airtel. So, all these things combined together, that is why Bharti Airtel is going up.
And how is it going up? Thanks, Ronit, for that. Quite a historic day for the stock today, because it has taken, I guess, its record all-time highs. The last high level above 500 that I can see is 533, which was October 12, 2007. 10 years later, the story is back on track, isn't it? Prashant, you've been looking at additional data points on Bharti?
Oh, always fun to look back and then maybe one sort of gets a perspective. But, what I basically did is, by the way, Bharti is about 10% away from its all-time high. So it's not quite there yet, but it's not very far. I think the high is about 590 or so. So about 10% left. I mean, at this rate, it could be done pretty quickly. But the last time it was where it is trading now, as you said, is October 2007. So I just went back and looked at what the industry, the telecom industry and Bharti's position was back then. And the numbers actually are quite interesting. So, I mean, the first, of course, is how many players, right? We've all been talking about the industry needs to consolidate, it needs to consolidate. Well, it looks like it has. Back then in 2007, there were only 3 pan-India operators. There were many very strong regional operators. I mean, actually, back then, Idea was a very strong regional operator. It was not a pan-India player. And they were, but in terms of pan-India players, there were only 3. We right now basically have 4, right? I mean, you count Idea, Vodafone as one entity and the rest of the players out there as well. You include MTNL and BSNL as well. In terms of all operators, which is pan-India, regional, plus, operations across, there were 9 back then. That number of 9 operators is now down to 4. You look at the industry size. I mean, the total industry revenue for the telecom sector back then was about 80,000 crores. It stands at about 1.76 lakh crores. So it's, moved up. It's more than doubled. Bharti's market share, Bharti's market share, which I've put, is only for 2009, the data that I could find, the oldest data that I could find, it was 30%. Right now, the market share for Bharti is about 34%, so it's actually improved. Let's move on to the next plate, and you'd see some of the more granular kind of details. Industry average ARPU, 330 back then. Now it's almost 1/3. That is 125 rupees. Bharti's ARPU back then was 400 bucks. It's less than half of that, 180. Look at voice penetration, data penetration. Of course, the big boom is essentially because of data as we are seeing it. So this is how things kind of stack up. There is one missing element here, and that basically is debt. Bharti acquired its African operations. It acquired a company called Zain. Now, of course, we talk about it as Bharti Africa, but it acquired Zain for about $11 billion in 2009. And that's essentially when Bharti took on all this debt and it became debt laden. I mean, so the current debt, as Ronit also pointed out, is about 91,000 crores. That's about $14 billion or so. What is playing out is deleveraging, very simply put. Infratel stake sale, I mean, if you take Bharti's 58% in Infratel, it could be worth about $6-7 billion. You add another potential $2 billion it could receive via sale of its DTH business. I mean, you're talking about some $8 to $9 billion worth of deleveraging. Which could bring its debt to EBITDA levels at very, very comfortable kind of levels once again. So I think the deleveraging really is what is playing out, along with some of the earlier numbers that I pointed out, which points to the market really consolidating. And how? Back to you.
Okay. All right, Prashant, thanks so much. We'll have Prashant come back, join me in just a second. Let's also, in the meantime, welcome Dilip Bhatt into the conversation, Joint MD Prabhudas Leeladhar. Dilip, Bharti and more Bharti. The question is, I mean, as you just heard some of my colleagues talk about these aggressive price targets, 600 plus. Do you see that coming? I mean, the point is it still worth buying the stock now if you haven't done so already?
Well, I think looking at the performance, one is really tempted to be bullish on this particular company and maybe possibly on the sector. But I think I would prefer to play it safe. I don't think this sector really is out of the woods. I think we are seeing some kind of deleveraging happening in Bharti, but not to forget the fact that the capital intensity of the business, if at all, is only going to increase further despite the consolidation. And we'll see that the capital intensity continues to go northwards, and company will find it very difficult to generate free cash. And I think this deleveraging by stake sale of some of the tower companies will help Bharti only to take some further debt without really ballooning the debt. And I think just to ensure that the capex continues. And I think till that particular time, that there is no clarity on that as to when the capex cycle will get over. I think it's very difficult to be bullish on Bharti. Sure, I think the ARPU may just go up after some of the consolidations. But more important, I think this particular fact is still weighing on my mind, and I will prefer to play safe on it. I don't think I will be in a hurry to buy the stock.
Okay, that's a fundamental view on Bharti Airtel. We're getting some commentary from TVS Motors as well. The numbers were absolutely fine. In fact, there was a beat at the operating margin level, and they're expecting double-digit margins to sustain even next year. And you can see the stock reacting now to some of that commentary that kind of came through. So there didn't seem to be any problem with the numbers per se. So I suppose that's what's getting in the buyers now, Prashant.
Looks like it. The problem with TVS has been low margins always, and the question has been when will they be able to improve that. I mean, the problem has been that they've said many times in the past that the margin improvement, that work is underway, it'll bear fruits, but it hasn't really done that. I just want to highlight another pack which is doing very well, and this is essentially sort of be the entire PSU pack. I think this is could be just rub off based on what has happened with Dredging Corp, where the government has decided to sell stake. You look at STC India, that is Straight Trading Corporation. You look at Shipping Corporation of India. You look at Hindustan Copper. And I'm not even talking about, of course, the public sector banks which are doing well. Just some of these, Steel Authority of India could be for, reasons specific to that sector. But that pack is doing pretty well. It figures as some of the top gainers right now on my screen here. I think Mr. SP Tulsian of MrSPTulsian.com is also with us. Mr. Tulsian, thanks very much for your time. Good to have you here. We were discussing Bharti in some detail earlier, and I just wanted your quick thoughts. Who would have thought a competitive intensity at all-time high, and the number one player is making fresh highs, almost fresh highs, yes.
Prashant, I think this has more to do with the technical factors, because when a stock touches all-time low, and at that time people are practically oversold in the stock with no positive view seen continuing on the stock on a fundamental basis, then if the sudden buying comes in by the strong hands, along with the short covering, we see these kind of things continuing. But looking to the Q2 numbers having posted by the company yesterday, and if you take the Indian operations, I don't think that there is any kind of respite seen on the Indian operations. One may argue that yes, going forward the pricing war has stopped. But just now I have heard Dilip, saying on the capex and all sort of things. In fact, capex is a big problem, and even if you take a call on the Bharti Airtel, the balance sheet of the company is having a debt consolidated balance sheet.
Now is to convert the entire fleet of central government cars. These are central government we're talking about. That also includes public sector enterprises. Where an estimate has been done internally that there are about 5.5 lakh cars today, and the idea is to convert all these gasoline, diesel engine cars to electric over the next 3 to 4 years. And 5.5 lakhs, mind you, is actually quite a staggering number. It's almost 1/3 of Maruti Suzuki's annual volumes. So that's the kind of number we're talking about. The source who briefed me said that this is something that is actively under consideration within the government. Importantly, we saw earlier this year EESL, Energy Efficiency Services Limited, they came out with a 10,000 vehicle electric car tender. We understand that in anywhere between January and March 2018, they're going to come up with another fresh tender, this time for 20,000 cars. And this is going to be a big boost to M&M and Tata Motors. I think what is interesting is, as we've said, electric cars are less complicated to assemble, and it means lesser entry barriers. So, you may expect a lot of players who don't have, even electric vehicle experience.
Right.
To come
Ron,
in
just one quick... over what time are we talking about completing this shift into electric vehicles? 5 lakh is the total estimated size of the fleet, the central government fleet, but over what period?
So 5.5 lakh, Prashant, what I'm told, the ambitious target is 3 years, but in all likelihood it's going to be like 4 or maybe spill over to 4.5 years. It's going to be done in a graded manner.
Okay. All right, Ron. Thanks very much for that. Mr. Tulsian, just a quick reaction on this. In case of, any company names that might come to mind. I mean, I remember Power Grid telling us that obviously it's a small component of their business. They'll look at setting up charging stations. But any suppliers, tier 2, tier 3 down the league, where stocks could stand to benefit at all?
So it is difficult to take a call, because what the major component which is likely to be seen or one should focus is the battery maker. And if you really see the situation going forward, if you are so aggressive and if you are so ambitious that the conventional cars can get replaced by 2020, I have my doubts, because if you really take the situation where power storage is the biggest problem, you can't store the power. beyond this thing. And you know, once you have these electric cars coming in, then you need to have the charging stations. And when you talk to the industry experts, they say that charging may take 1 minute to 10 minutes, depends on the quantum and depends on the capacity battery, you know. So it all depends that, you know, but it's very difficult to zero in, because if you really move on the electric car, then probably you know, get rid of 40% of the parts which are used now, you know, maybe like transmission, engine and all, and oil kind of things, you know, pistons, and you know, those who are making those conventional parts. So is it possible that we can migrate by 2020? I have my doubts, but yes, the things will start coming in and one will really be waiting to see the performance. But the critical things will be battery and the charging stations, you know, which needs to be considered. And I'm not able to at least zero in on any company taking this into account.
Okay, fair enough. Well, on that note, we're going to take a quick break. Reminder, our closing bell money control question of the day is, the Nifty Bank is at record highs. Are private sector corporate lenders a good buy? Log on to moneycontrol.com. Tell us what you think. We'll read out some of the most interesting responses. More names on the move. Add some more movers and shakers from the mid-cap basket. So Jet Airways, what a strong stock Jet has been last 2 or 3 sessions. Actually, this week has been a blowout week for Jet Airways, and now it's adding on more. Let's actually pull up a weekly chart as well. We'll get a sense of the kind of gain that we have seen. And Infibeam is the other one. These are two big movers in the last couple of minutes. But for the time being, we have Sandeep Wagle joining in as well. Sandeep, good afternoon. What are your trades today?
Afternoon, Surbhi. I would go with a buy in a Muthoot Finance, stop loss of 507, target of 525, and a buy in a V-Guard, stop loss of 222, target 235.
Okay, all right. Thanks, Sandeep, for that. Now, as promised, let's focus on the newsmaker segment today. And the newsmaker area of the market today definitely is sugar. Stocks buzzing on anticipation that the cabinet has, that's what we're saying, that's what we are given to understand from our sources. The cabinet is most likely to have approved an increase in the price of ethanol. Just over 40 is what we are given to understand. Vivek Saraogi, MD of Balrampur Chini Mills, now joins in to dissect the impact. Good talking to you, Mr. Saraogi. So can you start by telling us that if there is indeed this sort of a slight increase that's come through, what will it mean for your own margins and profitability on the ethanol side?
Yeah, good afternoon. So it's been done. The revised price of ethanol is 40.85, applicable for season 17-18 for dispatches for the period 1st December 2017 to 30th November 2018.
Okay. And this was earlier 39 rupees, right? 39 is now 40 rupees 80 paise.
85 paisa increase, 1.85.
And the dispatches start from the 1st of December this year, all the way up to 30th of November next year.
It's 1 year, 12 months, yeah.
12 months. Okay. And now, could you talk to us? What would this mean? What's the volume that you do? And I mean, not just you, but the industry. Yes.
See, I can tell you about my volume because everybody will have to tender what he makes.
Okay.
Or as per his wish. So at Balrampur, you know, we roughly would maybe be looking to tender around between 9 and 10 crore liters.
And now with this...
But that's an estimation. The tender is still on.
When you say you tender 9 to 10 crore liters, I mean, that is basically you put in a tender for this much and what you are finally... allotted, I mean, may differ.
India picks up everything now. There is no gap.
Okay, there is no gap.
It depends which state, you know, if you don't get state A, you have to go to state B, that's all.
Right. What was the total volume at Balrampur last year, Mr. Saraogi?
It was around, I think, you know, balance sheet, maybe around 8. I don't have the exact figures with me, but these are ballparks.
Okay, so this price, this is the administered price, right? 40 rupees and 85 paise.
Yeah, this GST and transport is over and above.
Right. So the volume, this entire volume would be bid out at that price, basically.
Yeah.
So, Mr. Saraogi, then what was the margin that you were making at the earlier price? And now with this increase coming in, almost close to 41, what will be the margin on the tender now on this particular sale?
Whatever quantity gets accepted into 1 rupees 85 paisa above last year. It's simple, isn't it?
Now, sir, a follow-up question on volumes. Now, one is given to understand the original plan was, I think, up to 10% blending. which never quite happened. Some reports indicated that we were only at about, I think, 2.5% to 4% in terms of total ethanol blending. Do you see volumes going up from here?
Yes, I see volumes going up because the expected sugar production this year is much higher. So last year, you know, the first figure is about 25% higher than last year. Last year we were at about 200 lakh tons we produced. This year you're 201 something. This year looking, you know, first estimate is 251 to 255. So if you have 25% higher cane, you have the consequent availability of molasses. And therefore with molasses, which is the raw material for ethanol, everybody has higher, you know, ability to tender ethanol. So the quantity will go up. How much this you would get, you know, once the tenders are done.
Okay, all right. So we'll leave it on that note then. Thanks so much for joining in. So that's Mr. Saraogi of Balrampur Chini confirming indeed what we told you earlier in the day itself, that there is a price increase, and now the price that companies would be getting for ethanol is 40 rupees 85 paise per litre. Mr. Tulsian, you had flagged this off in the morning itself that this is just an added benefit. Best picks then in the space, sugar?
See, in fact, this I've said 3-4 days back also in the morning when the Balrampur, when the Dalmia Bharat Sugar buy call was given by me. And if you now, as Vivek has said, 1 rupee 85 paisa is the clear increase. And I think the tender last date is 8th November when the company was all, you know, those who wish to supply, as Vivek has said, that they will be submitting their quantity bid, you know, which will get accepted at the same rate. So it doesn't make much difference in terms of takeoff, because even if it doesn't get what you call lifted, because companies will be making their calculations that if they can fetch the high realizations from the industrial and potable sectors, that is supplying to Indian made foreign liquor and for industrial purposes, because crude having gone up in the petrochemical segments, you know, the ethanol is getting used. Apart from that, the Indian made foreign liquors, you know, consumes a good quantity of that. So the sugar mills starts making their homework that how much will get diverted to the OMCs, you know, for supplying for blending purposes. But definitely this will be a better this one, because if you really see, in spite of the record financial performance having posted by all the sugar companies for FY17, in spite of the lower realization, if I'm not mistaken, at one point of time, maybe in FY16 they fetched the high realization of 45-46 rupees also per litre, but in last year they fetched about 39 rupees per litre. So definitely this will be increasing the profitability of all the sugar companies because of the quantity increase and because of the better realization. And I'm expecting that all the UP sugar mills, you know, which have posted the record lifetime highest profitability for FY17 will surpass FY18 quite comfortably because of the combination of this factor, higher sugar production and better ethanol realization. Yeah.
All right. The market, by the way, is basically almost back at the high point. The high today is 10,451. We are at 10,449. So about 2 or 3 points more, and then we basically are back at the highest level. Advanced decline is 1.3:1. Could have been better and should have been better, but I guess that's the point that Ashwini was making right on the top of the show, that kind of, I mean, the rally is, maybe it looks a bit narrow. It's not as broad-based as what we've seen on earlier occasion when the market's put on 100 points like it is doing right now. As we speak, I think we're, you know, bumping into those earlier day highs. Go on.
Oh, absolutely. Yeah, no, I was just adding to the point, Prashant, that a lot of metal stocks, by the way, are on the move. They're building on their gains. So we should pull up the intradays for Vedanta, for Hindalco, even a Tata Steel. So many of these stocks are surging away.
Some of these stocks sold off yesterday. I mean, they were all, I mean, actually the sector was one of the top losers in trade yesterday, but they're coming back. Just a couple of more names, and these are all in the futures and options space. I mean, you know, look at something like an IDFC Bank, 9.25% higher. You know, Syndic has been up from the morning. Raymond is up almost 8%, 967 on something like a Raymond. Bharti, of course, Bharti, if anything, has lost about 1.5%, 2 from the top. Idea is up almost 7%, so at about 9, almost just under 100. Chola Finance, great set of numbers from Chola Finance. I don't think the stock had done anything for the last couple of years. It's at about 1240, 7% higher, so big up move there. Back at the highest level. Advanced decline is 1.3:1. Could have been better and should have been better, but I guess That's the point that Ashwini was making right on the top of the show, that kind of, I mean, the rally is, maybe it looks a bit narrow. It's not as broad-based as what we've seen on earlier occasion when the market's put on 100 points like it is doing right now. As we speak, I think we're, bumping into those earlier day highs. Go on.
Oh, absolutely. Yeah, no, I was just adding to the point, Prashant, that a lot of metal stocks, by the way, are on the move. They're building on their gains. So we should pull up the intradays for Vedanta, for Hindalco, even a Tata Steel. So many of these stocks are surging away.
Some of these stocks sold off yesterday. I mean, they were all, I mean, actually the sector was one of the top losers in trade yesterday, but they're coming back. Just a couple of more names, and these are all in the futures and options space. I mean, look at something like an IDFC Bank, 9.25% higher. Syndic has been up from the morning. Raymond is up almost 8%, 967 on something like a Raymond. Bharti, of course, Bharti, if anything, has lost about 1.5%, 2 from the top. Idea is up almost 7%, so at about almost just under 100. Chola Finance, great set of numbers from Chola Finance. I don't think the stock had done anything for the last couple of years. It's at about 1240, 7% higher, so big up move there. Dabur reported numbers yesterday around the same time, a little earlier, 5% higher. Dabur, by the way, is at a new all-time high. And then you look at Indiabulls Real Estate, Divi's Laboratories, and so on and so forth. And of course, some of the metal stocks that Surabhi was pointing to. So that's basically what we have going right now. Time to take up some viewer queries coming in on social media. And the first one is from Sumit, who has 1,500 shares of Syntex Plastics at 92 rupees. He wants to know the long-term view on the stock. I mean, the opening price on Syntex the day it demerged and came to the market was 130 rupees. It's, I think, fallen below 90 today. Sumit's purchase price is 92. What's your advice here, Mr. Tulsian?
See, the results have not been seen, really great, a big disappointment, but that has come because of the prefab. And after hearing the management commentary, I don't think that much, in fact, we have been keeping the positive view because looking to the situation and looking to the product demand. And if the prefab improves, which has been the dampener for this Q2 numbers, I don't think that there is any kind of disappointment likely to be seen going ahead. And after hearing management commentary, they seem to be quite confident that yes, things will start improving from there. So maybe a level of 85, could be a good entry point, or those who have been holding it, I'll advise them to remain invested into the stock. Yeah.
Okay, the next query is on a PSU banking stock. Vijay has 300 shares of Canara Bank, bought them at a price of 315 rupees. He wants to know whether to hold or to sell out. We'll get a technical view with Ashwini in just a second. But Dilip, your view, I mean, Canara Bank is one example. If I were to broaden out this question, PSU banks, what's the sense now? I mean, should you still be buying fresh?
I think the first round of run-up has already happened. And I think now the next leg of rise possibly will be very gradual and it will be very calibrated based on certain parameters which all the investors will be watching. Whether this recapitalized amount will get consumed by further provisioning or further slippages. So I think, and plus the ability to really step up the credit, because the credit growth for everybody has been pretty muted. So I think a couple of these factors will really decide whether the fresh round of buying for PSUs will happen. And my own sense is that it will happen very gradually and after observing very closely. So I think we should wait and watch, still focus possibly on something like an SBI or maybe a Bank of Baroda.
Okay, so let me take Canara specifically with Ashwini. Ashwini, so 315, he's made some profit. Should he book it or should he just continue sort of being a little patient with Canara?
They say if you have a bath in the Ganges, you are purified. So let's not assume that just because they have capital, they have learned how to lend and they're all good. He should have exited at 450 because he got in at 350. Now, the trailing stop here is 395. And remember, these guys will again be in trouble in 5 years. So, take it that way. They are not going to become HDFC banks, etc. So that way, keep a 395 type of stop and possibly look for a retest of 450, 460. Those would be good levels to exit. I think a lot of other reform needs to happen. Let's see if that happens. But overall, the first leg of the move is done. And from here, he shouldn't let the stock fall below 395.
Okay, fair enough. So there is Canara Bank and PSU banks in general. Let's get our next question. Selva has 50 shares of Lupin, basically wants to know whether to stay invested or sell. We don't have a price here at which is gotten at, but Lupin, Mr. Tulsian?
No, I won't advise, because we have been keeping the cautious view on the pharma stocks, and only pharma stocks if we are advising. We have been giving buy call on 3 stocks, that is Aurobindo Pharma, Glenmark and Divi's Lab. And if you see the results of Divi's Lab, that have been quite satisfactory. And I am not, because looking to the management commentary also, they have indicated that probably the things will start improving only from FY19. The cautious view has been given for this H2 of FY18 as well. So taking that into consideration, I won't be keeping a positive view. So better to either shift to the same space in the pharma space, either to Auro Pharma or Glenmark or Divi's, or look for some other sector.
Fair enough. Okay, so the advice is clear from Mr. Tulsian. Dilip, appreciate you joining us. The closing bell. Thanks very much for being here. As always, great speaking with you. Mr. Tulsian, I just have one more question to you, and this is with regards to what happened with dredging corp, where the government wants to get out. And, what's happening in other PSU names, Strait Trading Corporation, Shipping Corporation, Hindustan Copper, a few more. It's risky at best to take what's happened in one company and extrapolate that for a bunch of other names, but any reason why some of these other companies that I mentioned should do what they're doing today?
See, Prashant, in fact, one has to take an independent and individual call on that. First, if I quickly come on the Dredging Corporation, this is a very small company. Even if you take 20% upper circuit market cap is sub 2,000 crore. Government is holding 74% stake, and rightly so. If the share has been prior to this 20% ruling closer to about book value of 550 or so. So there is no logic. The government is very pragmatic in taking the view. If it is a non-strategic, get out of the business. And probably because of the asset value, because of the, obviously you have the historical accretion seen having taken place in the dredging equipments also. So probably people are enthused that yes, a total exit of the company will change the fortune. Now, if you extrapolate the same principles, I don't think that can get applied to MMTC, because looking to the present market cap, it's seen quite expensive. Coming on STC, because MMTC, STC both used to be the canalized agencies. MMTC used to be for the mineral and metals, and STC used to be the non-mineral and metals, like imported cars and all that. So both of them have huge godowns and warehousing spaces. So probably STC may be having some kind of value coming in, but I don't think that is happening with MMTC on a replacement cost basis. Coming on Hindustan Copper, I think that if it happens, then probably the Hindustan Zinc story can get repeated. If you recall, in 2002, when the Hindustan Zinc was divested at 40 rupees per share, that means effectively 4 rupees. Post that, the one share has risen to 10, and today we are seeing the price of 330, 320, in spite of maybe a dividend of more than 150 rupees or 120 rupees in this period. Similar is the case with Hindustan Copper. This is the only integrated company, because you have Vedanta and Hindustan and Hindalco. They are purely converter. They buy the copper ore, they import copper ore, they just earn TCRC. That's not an integrated. So if you have your copper mines, which Hindustan Copper has in Rajasthan, in Khetri, and 2-3 other mines, that will really be a gold mine, because that will enhance the production. And definitely Vedanta and Hindalco both will be eyeing when the strategic investment comes in. So one has to understand and keep an interest alive while taking a call on Hindustan Copper. If the government decides to completely exit from that, that can really be seen as a pricey asset.
Okay, all right, Mr. Tulsian, thank you so much for joining us today and taking up all the questions and the queries. More numbers pouring in. That profit line is much above estimates. 297 at the PAT level. We were looking at a poll of about 213. Top line is more or less in line. 885 EBITDA is what I read. That also seems to be largely in line. Anisha was telling us that one of their plants, that's Ratnagiri, that's where generation is supposed to pick up, but I think the other one is struggling. Do we have that data on generation, Anisha?
Well, yes, we have got all the data. Just a word on the profit figure. The revenue and EBITDA has come in line what we were expecting, but the profit is high because of the other income. So let's not read too much into the positivity of the numbers. But yeah, not taking away the fact that the generation at least has not dropped too much. This time around, they have generated around 6,117 million units versus around 6,276 million that they did last year. In terms of PLF, Vijayanagar 43% versus 31% earlier. That was expected to happen because we had seen some pickup happening out of the Vijayanagar plant. Ratnagiri 61%, a tad bit lower versus 82% last year, again on expected lines. However, some other news trickling in that might be taken positively by Street. They say that the net debt reduction in the first half of the year has been around 1,700 odd crores, and that should go down well with Street. Remember, the company has been really aggressive in terms of acquisitions, adding pressure to their balance sheet, but this should go down well. Other than that, they are just adding up some minor capacity of around 36 megawatt. EBITDA looks to be in line. I'm just waiting to read more commentary when it comes to the electric vehicle, because that is the next thing that the Street is really focusing on. But as of now, inline set of numbers, I won't get too excited by the profit number, because Vijayanagar plant, until unless it gets a PPA, the numbers will be a bit volatile.
Okay, fair enough. Thanks.